Hello there, I'm Ameera David. This is Boom Bust, and these are the stories we are tracking for you today. Apple moves to revamp the iPad as more speculators snap up bearish bets. I'll have all the details on the company's performance coming right up. Then John McDonnell is on the show. Our very own Ed Harrison sits down with him in San Francisco to talk about why Bitcoin is appealing to the mainstream consumer. You don't want to miss that. Plus, in today's big deal, we'll get a live report from Ed himself as he attends Coin Congress 2015. He'll tell us who's there and what they have to say about the future of the cryptocurrency. We've got that and so much more lined up for you on today's show. Don't go anywhere. Boom Bust starts right now. Well, it seems less and less people are looking to take a bite out of Apple. The Apple iPad, that is. If you take a look here, this will give you a sense of the general trajectory of sales for the product. As you can see, 2015 has been its worst year yet. Analysts say it's partly due to the release of the iPhone 6 and 6 Plus that features larger screens for consumers, plus the fact that iPad upgrades aren't offered as regularly. Regardless of the reason, Apple iPad sales are slipping in the consumer market, having fallen now 6 straight quarters. That's why the company is now looking to revamp the tablet and refocus it towards businesses. The business sector has been a bright spot for sales despite the lagging demand. So right now, Apple is working with more than 40 application developers to make the iPad more appealing as a work tool. That's according to the Wall Street Journal. Apple is looking for all the help it can get as it tries to appease investors who are getting a little worried about how the company's charts are looking. Keep in mind, the tech giant stock has been down in the final quarter of the fiscal year, falling 8.44% since its third quarter earnings report. As a result, we're seeing speculators in Apple options snap up bearish bets at the fastest rate in almost 4 years. That's a huge deal. Also concerning is the fact that 2 major brokerage firms have downgraded Apple in the last couple of weeks. Those are both Bank of America Merrill Lynch and Jefferies and Company. Now, a lot of this has to do with Apple's exposure to China, which accounts for a significant chunk of its revenue. The economy has been slowing there for quite some time, but now with the central bank devaluing the yuan, Apple products are looking to be more expensive locally and therefore much less profitable. It's clearly spooking investors who look at Apple as a company heavily dependent on China for future growth. To talk about Bitcoin, John McDonnell is on the show. John is the co-founder and CEO of Bitnet, a digital commerce platform. Bitcoin as a currency has not been that prominent, and it seems like the focus is actually shifting to Bitcoin as a payments and transaction system. So Ed first asked for his assessment on that, on how Bitcoin is doing, and here's what he had to say.
A lot of the headlines revolve around the price of Bitcoin, and there was that run up in late 2013 where it got above 1,000. It crashed, right? And so, as an asset class, for speculative trading, I think it's probably become a little less interesting. It sort of has mellowed out. The volatility is diminished. It's trading within kind of a $200 to $300 range. But frankly, I mean, for us, I think that's good. I think that the decrease in volatility is helped in the sense of it becoming more stable and thus more attractive, okay, both as a store of value, but for our purposes, as a currency, as a payment method for consumers to buy and hold Bitcoin.
Well, tell me a little bit about where Bitnet sits in the Bitcoin payment process.
Oh, certainly, yeah. So we are a service layer, in effect, on top of the Bitcoin network, right? So Bitnet provides transaction processing and risk management services that enable retailers, online marketplaces, and Bitcoin exchanges to accept and trade Bitcoin safely.
Right. Let's talk about transactions and security for a second here. Tell me about ways that Bitcoin can now allow users to rescind payments through multi-party signing transactions. We were talking about this earlier, that now it seems that the whole, I get an item, I don't like this this particular item, or I feel like the goods and services that I've received are not in adherence with the contract that we made. There's now a way to rescind that transaction. Can you talk to me about that?
Yeah, absolutely. I think that, and that's a very exciting component of Bitcoin, right? It's programmable money. You can attach conditions to it. So for the ultimate transfer of the value, okay, and we were talking about this earlier, it's so-called multi-sig, a multi-signature transaction, right, where there are, in this case, the simplest case, 3 parties to a transaction. And I think it has great utility for marketplaces. We talk a lot about buyer fraud and protecting merchants through Bitcoin because it is digital cash. It's a push of stored value. But I think as important is, especially for online marketplaces, is seller fraud. All right, it's a place where consumers can go to buy that proverbial used Rolex, right? But if the Rolex shows up and it's a fake or it's broken, they want their money back, okay? And Bitcoin is a way to do that. And the way that works is there are literally 3 private keys created as part of a transaction. And most of this can be done in an automated fashion in the sense that the transaction can refer to some extrinsic data source like UPS or FedEx delivery confirmation that can be fed into the system, and Bitnet can provide that service. We can be one of the 3 parties between the seller and the buyer to confirm that the goods were received, they were in good shape, and in effect then release that value to the seller. And so that's a pretty exciting application. That
is interesting. I want to talk to you a little bit more about that. But let me go back to one other thing that you said that's interesting is Bitcoin is obviously advertised as a decentralized network for transactions that doesn't rely on trust. But on some level, the existence of companies like yours that can actually get in between and help consumers rescind transactions via multi-sig, that shows that there is a need for trust on some level in terms of companies like yours being trusted parties within that system. Can you tell me, how do you reconcile that trust with the whole concept that it's actually not a network where trust is necessary?
Yeah, certainly. And I think that in the most basic Bitcoin transaction, like a P2P transaction where person A sends Bitcoin to person B, those 2 parties know each other. There's really no need, right, for an intermediary of any sort. And that would be a remittance, okay, an expat sending money home to their loved ones. But in a transaction where the 2 parties don't know each other, okay, it's in effect the buyer is pushing digital cash to the seller. Absolutely, there needs to be an element, and we call it a service layer. You're calling it trust, and I think we're using the same, different words for the same notion, in the sense that there needs to be an intermediary, okay, a function to basically arbitrate in case the transaction didn't go down as intended or as agreed.
Right.
Right. So now I think that there is the ability to automate that to the extent possible, so that you don't need the human element to come in and the cheeks and seats, right? And a lot of what we're trying to do with our service on top of the Bitcoin network is take advantage of the fact that there are no banks on the Bitcoin network, right? There are no chargebacks. There's a lot of the costs inherent with the card network system are removed, okay? But we need to reintroduce certain elements of that. So, with chargebacks, going out the window, so does consumer protection, right? You can't call your card issuer and say, that was a fake Rolex. But you can enter into a multi-signature transaction where in an automated fashion, if that watch shows up and it is what you had intended, what you had ordered, then everything should go smoothly, the Bitcoin is released. But if it's not, if it's a fake, then you're going to have recourse. And you can rescind that transaction by declining to authorize the transaction, the release of the Bitcoin with your private key.
Now, I want to play devil's advocate here for a second, because you were talking about a typical transaction. The mainstream consumer is not really that interested in an alternative currency. So, you know, Joe Schmo is not going to go and actually use Bitcoin necessarily for that particular transaction. First of all, how does Bitcoin appeal to them, to those individuals that I'm talking about now? And second, why should he or she care about Bitcoin?
You know, it's interesting because I think that the answer to that question is, you know, the perspective of this person, this hypothetical person. If this person is in an emerging economy and has a mobile phone but no access to financial services, does not have a bank account, and in this case we're talking about billions of people, okay, they are very interested in Bitcoin because it's really their way, it's an on-ramp for these billions of people to join global commerce, okay, to buy that train ticket, to buy that airline ticket, to buy that Apple product, you know, from a retailer anywhere in the world and have it shipped to them.
Time now for a quick break, but stick around because when we return, we'll talk about Alibaba. The Chinese retail giant stock is taking quite a beating, and we've got the details. Then Ed Harrison joins me for a very special big deal. He's at Coin Congress 2015, the San Francisco-based Bitcoin conference, and he'll tell us what's ahead for the cryptocurrency, so stay with us. And as we go to break, here are the closing numbers at the bell.
In this episode, we're going to talk about the problem with money. Many, for example, now agree that having bankers print over 90% of money by issuing loans is a problem. They also see that the euro currency is a problem for nations like Greece. We're going to talk about all of this.
В 1453 в этом году родилось. Четверо было нас детей-то.
Они бегуны, староверы. Сначала я думал, что они истинно такие люди, святые, можно сказать. А потом, когда узнал, у них в жизни всякое было.
Когда это дело произошло, и было там у меня помышление идти в реку утопиться. Видишь, как 27-й год и не допросишься никого.
Welcome back to the show. Now, to continue the conversation on tech, Max Wolff is on the show. Max is the chief economist at Manhattan Venture Partners. According to reports, Apple is set to unveil the new Apple TV in the fall. The device will be launched with its own app store and a software development kit for developers. So Aaron first asked Max if he thinks that will disrupt the current television cable atmosphere, and here's what he had to say.
Right, so we've all been waiting for this legendary cord cutting that's going to happen, right? When people just get off cable and dump the TV finally and permanently and move to the internet. It hasn't happened. The most we've seen is what they call cord shaving, where people kind of spend less time and less money on their cable and more time, more money on the internet experience. The Apple TV has historically been a very mediocre device. I have one, and basically diehard Apple people buy it, and if they're really diehard, they pretend it's also good, right? But that requires a lot of creativity, which I lack, right? I have a different job. So the point is, I think it's been pretty underwhelming. The new one's going to be faster. And look, what Apple's been really good at doing is monetizing other people's hard work, right? And that's what you need an SDK, a software developer kit for. Get everybody out there, get them building things. I think it's promising. Eventually we'll see it. The set-top box is pretty archaic, right? It's a little bit like having an actual trunk strapped to the back of your car. But we still call it a trunk, and they survived an awful long time. So it's not clear, but I assume they'll eventually make some market share. I don't see Apple TV being all that revolutionary, and I don't think it'll sell that well, just because historically they've had a hard time moving the TVs. They do a lot of things really well. Historically, and I'd be happy to be wrong here, historically Apple TV isn't one of them.
Now, only 6 companies, they're driving gains in major U.S. stock indexes right now, and that's this year I'm talking about. And those would be Amazon, Google, Facebook, Netflix. These are just some of the big ones. And they account for more than $664 billion in value added to the NASDAQ this year alone. So does this raise concerns about the health of the overall market?
Yeah, so part of the problem is people tend to watch index reports, whether that's the Dow, which is 30, or the NASDAQ, which is probably 100, depending on which index they're looking at, or even the S&P, which is 500, in a universe of thousands and thousands of shares. So lots of people at home, their experience in their mutual fund and their portfolio doesn't really well get spoken to by those reported numbers. NASDAQ is market cap weighted, so a small number of really, really large companies with huge market caps, market capitalization or total value, dominate the space. So Apple is the sort of juggernaut here at $750 billion market cap. Apple's moving the entire index all the time, and the most successful, biggest companies have the largest market caps, and they're grossly overcounted in these indices, who have a, therefore a little bit of a misleading feature to the way they're often seen and described. That being said, the big monsters of tech that do everything have done really, really well, in part because they're acquiring a lot of the interesting startups. They're in every business. They make sure not to fall too far behind, or they wouldn't be one of the biggest players in the space. And so they do lead us to this opinion about what's going on in the market, which is both sectorally and corporate wrong. And by sectorally, I mean NASDAQ has all kinds of growth companies, including specialty manufacturing, biotech, et cetera, but they're so small by market cap that we end up getting this overall picture of the market, which is really true of 10 major tech companies, and it's somewhere between less than super useful and slightly misleading.
That's interesting. Now, historically, when we see fewer and fewer stocks lifting the broader market, it means that we're at the top, we're at the very top. So do you think that this is the case right now or no?
Yeah, so I do. I mean, it's not super popular, but my guess would be that for 2015 and maybe for the next little while, we've seen a lot of things put in their top. We're about 6 years plus into the expansion. Our equity market values are up over 150% off the troughs, baselines in mid-2009. That's about as long as the average expansion goes. That's about as much or more as the average rise goes. There's lots of macro problems. We've addressed very few of them. There are a lot of instabilities and problems coming out of Europe and China, and Chinese leadership in the global economy looks to be problematic for the near term. So my guess is that it's going to be a lot harder sailing. You're going to have to pick more carefully, and folks should probably slightly adjust down their expectations of future yields. Doesn't mean the world's coming to an end and we'll all be eating discount soup in a dark basement, right? But I think the sort of roaring aughts that we had a blow up in 2008. I think we've had an awful good run here for about 6 years, and I think people should probably tamp down some of their expectations of gain.
And what are your thoughts on the roller coaster ride that is the Chinese stock market right now?
So I don't pretend to know, and I think it's got more the dynamics of small speculators. And the one thing you learn if you know history of small speculators is they're super, super unpredictable, right? So the average person with a math problem is easier to forecast than the average small retail investor. There may be community overlap as well, but I doubt it. In any case, it's a bit of a fool's errand, so I usually try to skip it. I do a few things that I can't do well every day and then call it a day.
All right, moving right along here. Alibaba, the Chinese e-commerce giant, announced disappointing quarterly revenue growth on Wednesday. Analysts cut their price targets for Alibaba Group shares after the stock fell to a post-flotation low over concerns about China's struggling economy. Joining us now live from New York to discuss is Miss Erin Ade. Erin, I understand the company reported that revenue was up 28%, but that growth was below Wall Street expectations. What's the story here?
Yeah, that's absolutely right, Ameera. On Wednesday, Alibaba unveiled its latest results. Quarterly revenues grew by 28% year on year to roughly $3.3 billion. Now, that's down from an average 56% revenue growth in the previous 12 quarters. But profits, they still rose by 23%. And yet, despite all of this, investors, they were still disappointed. And the firm now plans to spend up to $4 billion on buybacks in order to bolster its share price. Now, Alibaba shares, they fell 5.1% to $73.38 at the close of business in New York on Wednesday. However, shares are still trading above the initial September IPO price of $68. And you'll remember that IPO, it raised a record $25 billion for the company. Yet Alibaba, they also announced plans on Tuesday to buy back $4 billion of stock. And this will be the company's first buyback since listing. And they'll purchase these shares over a 2-year period. That's going to be a 2-year period in which they purchase these $4 billion worth of shares. So a lot going on at the company right now.
Indeed. It seems like they're being proactive here. But is it clear that the drop in investor confidence is stemming from the situation in China?
Short answer, yes, absolutely. You know, China's economy, it grew at its weakest pace since 1990, and Alibaba's market value, that's plunged $100 billion. So investor confidence, it's been seriously shaken up here. Now, as we've been discussing all week on the show, it's kind of been the theme of the show for the week outside of Ed being in San Fran. You know, China, it surprised markets by devaluing its currency on Tuesday, and they did this in order to support their slowing economy. But this move by the Chinese government, it's raised questions about a tangible slowdown in the country's economy that could lead to impacted earnings for companies like Alibaba down the road. And obviously, we're seeing some of that right now. And, you know, according to Bloomberg, Alibaba's slowing growth, that stems from saturation of the e-commerce market in China's larger and wealthier cities, along with the company's strategy of kind of shifting to services over smartphones and tablets, which it was so good at and also helped generate a lot of ad revenue. Also, you know, China has been introducing policies that make it cheaper to import overseas goods, and as a result, Alibaba, it's now competing directly with JD.com. That's the Chinese electronic commerce company, a very big company in China as well, and they're competing with them to introduce more brands from the U.S. and from Europe to the Chinese market. And, you know, aside from just having to deal with an overall slowing economy in China, Alibaba has also been battling criticism from the government. You might remember back in January of this past year, there was a report by the State Administration for Industry and Commerce, and they accused Alibaba of allowing merchants to operate without required business licenses, also to run unauthorized stores that co-opt famous brands and sell a lot of counterfeit items. So really, Alibaba is just getting, you know, hit from all sides right now.
Wow. Yeah, they're facing some significant headwinds here, and I'm sure it's spooking investors. But before you go, I want to ask you briefly about another big occurrence coming out of China this week, the port explosion in Tianjin. What can you tell us about the impact there?
Ameera, it's a real tragedy. That's the best word for it. More than 700 people have been injured, and at least 50 have been reported dead following a massive explosion in China's northern city of Tianjin. Now, Tianjin is one of the largest and fastest developing industrial centers in China, and also one of the busiest ports in the world. And the blast happened on Wednesday night at a warehouse that stores toxic chemicals. It tore through an entire industrial area in the port, and it also produced shock waves that were felt up to 2 miles away. Now, here's the thing. Had the blast occurred during the day, the death toll, that would have likely been far higher than what it is, and it still is quite high. But by Thursday afternoon, the fires at the site, they continued to produce very large clouds of smoke. And Tianjin officials, they're still unsure about the nature of the chemicals, but they've decided to let the blaze burn out on its own. Also, you know, it's been reported by Reuters that the trading and shipping sources, from the trading and shipping industries, they say that the explosion has disrupted chemical and oil tankers going in and coming out of the ports. And apparently there's a real slowdown there. So long story short, this explosion, it's likely to have global implications in terms of import-export from China.
Oh, tragic. I was just looking at the photos there. All right, hate to leave it on a sad note, but Erin Aid, thanks for all that great reporting out of our New York studio.
Thank you, Ameera.
It's time now for today's big deal. Coin Congress 2015 is underway in San Francisco, and our very own Ed Harrison is attending. It's a Bitcoin conference taking a look at the industry's landscape both now and well into the future. Ed has been gracious enough to step away and talk with us, give us the details on some of the presentations over there. So Ed, good to see you. You've heard a few different presenters so far. One of them, as far as I understand, is called Planet Capital. So tell me, who are they? What do they have to say?
Yeah, I have a few notes here because they said a lot. Basically, what they were saying is that there are 2.5 billion people in the world without bank accounts, and that Bitcoin technology is a way of getting them into the global financial system. And in particular, Planet Capital is trying to create an alternative financial services network that will be able to serve these individuals more cheaply and easily. And they say on their website, quote, that Planet Capital holds the intellectual property rights for 3 patent-pending proprietary methods for the execution of cash or cash equivalent transfers over open-loop financial networks on electronic terminals, utilizing a virtual management system. What that basically means is they have ATMs, Bitcoin ATMs, and they patented this stuff so you can actually transact in Bitcoin, virtually, but you can also get money out in fiat currency, if you will. So this is something that's pretty interesting.
Yeah, it is. It sounds really interesting. I want to hear about another presentation from Gift. Tell us about what they do.
Yeah, so Gift is a gift card repository, and they're an aggregator as well that uses blockchain technology, which is the thing that's behind Bitcoin. It basically allows you as a consumer to store all of your gift cards in one place, transact using their app instead of fumbling around to look for different gift cards that you might have. Now these guys, they see Starbucks as a model, in that Starbucks' loyalty program is essentially a mobile financial services network. It's really one of the biggest in terms of apps that are actually exist right now in terms of financial services. The difference here is that Gift, they're going to allow you to use a multiplicity of vendors in one app, and then the back end of that for merchants is much more secure than the way of having gift cards today. So good things for the consumers and for the merchants as well.
Yeah, and Starbucks is a huge goal there. But I want to ask you really briefly about marijuana, actually. It's something that, as I understand, is working its way into the Bitcoin industry as well, and I guess I'm not too surprised about that. But tell me about the buzz around that and the cross-section of marijuana and Bitcoin. What's going on?
Yeah, a lot there. I got a lot of notes here. Let me see if I can go through pretty quickly what I took in. You know, marijuana, even though it's legal for recreational use in 3 states now, that's Colorado, Washington, and Oregon, and it's legal for medicinal purposes and many more, it's pretty controversial. And so, in fact, the feds, they won't allow banks to deal with the industry, and so these guys are pretty much doing cash only. That basically means they have warehouses full of cash and no banking relationships. So some interesting factoids in this. Colorado gets $20 million in tax revenue per month from a $200 million per month revenue industry. So estimates are that in total, by 2019 in the United States, we're talking $30 billion in size. Yet this is a largely unbanked sector. This is the same kind of problem that you have in other legal, but somewhat controversial industries like gaming and adult entertainment.
Ed, you've got to get back to that conference. I've got a lot more that I want to ask you about your impression of how the industry is doing and where it's headed, but we'll have to talk to you about that when you get back to Washington, D.C. right here in studio. Thanks for all that insight. We love hearing from you guys, so tweet at us at Edward NH, at Bianca Vicini, and at Ameera David. Remember, you can see all the segments featured in today's show on YouTube, youtube.com/BoomBustRT. From all of us here at BoomBust, thanks for watching, and we'll see you next time.